Hello there, this is Bruce at Fleet Capital Management. It is Friday afternoon, the 7th day of February. The market just closed a few minutes ago, and I want to take you through a difficult week, a strange week, and show you what I am doing to do my best to protect and grow your portfolio. So I think you will find this rather interesting. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at Fleet Capital Management. So this is a slide from last Sunday, I think, when I was talking about the tariffs and such. And this is a slide from one of my favorite analysts. And what he was saying, just to remind you, is every time sentiment gets to this level right here, it tends to lead to some type of a price drop. And we're seeing that right now. So the analyst is Tom Bowley. He is, like I said, probably my favorite market analyst. He's not a stock analyst per se, although he does do that, but his strength is on what's going on with the market. And so I listen to him very carefully. He is right a whole lot more than he is wrong. If we look at this is the S&P 500. On the left side is the daily chart. On the right side is the weekly chart. And I know we look at this all the time, but I really want you to kind of focus in on something. Let's start with the weekly chart. I put this yellow rectangle bracket around this pricing so that you could more easily see. And this is each line is 1 week. So this is months now. We're doing nothing. The market is in a trading range. It's really not doing anything. And until it breaks out of this range, either up or down, but I would expect it to be up. Until it breaks out of that range, if it feels like we're not going anywhere, we're not. This is exactly why. There's some good news on the weekly chart. We are getting volume is still to the upside. There are more buyers than there are sellers. And that little green wave right there tells me that there's some more buyers on average than sellers, although we are getting conflicting signal, and they're measuring two different things. On the OBV, it is starting to turn negative. So we've got two different ways to analyze volume, and they are conflicting. Down here is momentum, and momentum is clearly below the zero line, which is not good. But it was very strong down, and then it kind of stalled, starting to come back up and then kind of stalled. So all that to say, yeah, everything's mixed, and we're traveling around in this box. If we look on the daily, what I'd like to show you here is right there is where the market closed today. And then I put this arrow on to show you that on this day over here, it closed at exactly the same level. And that day was the end of November. So from the last few days of November until today, even though there's been some enormous heartburn in here, heartburn from the DeepSeek AI announcement from China to the tariffs on China, and then, which I can somewhat understand, but then on Canada and Mexico, our two largest trading partners, which makes zero sense. And those have now been dropped, at least for the time being. My point of this chart is from the end of November until now, we're at exactly the same place. But we have had a lot of junk go on in between. So I thought you might find that interesting. So with all of this uncertainty, what am I doing? What am I doing to try to help? Well, let me show you. Here's a correlation chart that I showed you once before. And remember, if you look over here, this is the S&P 500 or the market. And then here is a list of different types of ETFs. And if you look at this one, FTGC, that's a commodities ETF. And if you follow the line all the way over, it says 0.17. And that means that the correlation between That commodity index and the stock market index, the SPY, is only 0.17. So if it were 1.00, it would mean they're perfectly correlated, meaning they go up together, they go down together. This is not correlated. So it really, one does not rely. So if we have weakness in the overall stock market, which is my point, if we have that weakness, this may or may not, but may do well because it's not correlated. It's not going to be dragged down by the S&P. I have added that to portfolios. Gold. Gold has a correlation of 0.25, extremely low, and just like commodities. And I have added that to many, many portfolios. This is part of what I'm doing to try to offset the instability that we're seeing in Washington, D.C. right now. In addition to that, many of you uh, owned, or I should say it this way, some of you were participating in IBIT, which is this ETF. And that goes up and down pretty dramatically. And we've done very well with IBIT. And IBIT is a little bit closer, but not even half the correlation to SPY. But what I've done here is I have many of you in an IBIT program that has absolutely no downside risk. I've got others of you in an IBIT program that only has a 10% downside risk and about a 30% upside potential. So very asymmetrical type of return. So these are all the things that I've begun doing in this past week since the tariffs and all of that mess started. So when you see that, I want you to understand why it's there. Okay. Here's another thing. When it comes to stocks, this is my current stock portfolio today. And what you will see is it is very diversified among different sectors of the market, and it is very diversified in industries of the market. I'm doing this on purpose. We had a very, very high concentration into tech for the last few years, and we're broadening that out. Just trying to have more diversification. And also, for the most part, where I was buying 5% of an account value in a stock, I'm now buying between 2 and 3%, depending on the risk level of the stock. So that's another thing that I'm doing to try to reduce the negative side of volatility. Lastly, this is here's a list of my current stock holdings. Most of you probably own most of them, maybe not all of them. And there is an AI score given to each stock. The range is 1 to 10, 10 being the best. And this AI score is calculated using about 500 different parameters that would cross among fundamental analysis, technical analysis, and sentiment analysis. And what I want you to see is that our stocks are either nines or tens. And it will have to be a very special situation for me to buy lower ranked stocks. But just so you know, this AI score, when they score it and 10 is the highest, they're saying what is the probability that this stock, based on fundamental, technical, and sentiment indicators, will outperform the market over the next 90 days. It always uses 90 days. This is updated every single day. And there's no way that a human being could update 500 different indicators on all these different stocks, weight them all. That's why I love AI so much, because AI can do that. And I just want you to see. So quality. So what am I doing to help? Well, correlation is one of the things. Diversification is another. Quality and percent allocation is another piece that I'm doing. Then there's one more piece, and this is a very minor change, but I'll show you this on the charts. Stop management, I've always said this, always, is the absolute hardest part of money management. because there are very few rules. It is much more art than it is science. And what I've done is I've decided to kind of do a best of both worlds. And I'm going to show you this on the chart. My daily charts are now using alert stops where I am alerted if price hits a certain level. My weekly charts are now using max stops. This is the most we would be willing to lose on a stock purely based on what the chart is saying. So I'm going to show you this. This is very, very interesting in a minute. And actually, I've never seen anybody else do this. So bear with me. I think this is going to be outstanding, and I'll show you why in a minute. First, let's look at our matrix. On the dailies, our matrix has been getting better. It's on the green. On our weeklies, we've continued weakness, and we now have really, it's just showing that the volume and the MACD are down. Both of them are pretty much down. Our 2-week moving average is still above our 10-week moving average. That's still up, and that's good. Our daily moving average stack, funny enough, interestingly enough, has gone back up to full green. I'll show you this on the chart. We are not in a bear market. And very interesting to me is the VIX. The fear index is still below 17, which is quite shocking to me given the volatility that we've seen in the market. Very shocking to me because remember, if you're seeing a lot of volatility or downside action or things like that, the VIX should be going up. It's been kind of staying the same or going down a little bit. I will tell you that Tom Bowley is not happy with this. Tom Bowley thinks that the VIX may be giving us a signal that is not clear, but a signal that there might be some interesting times ahead. So we'll come back to that. Let's talk about that stop management for a second. This is one of our stocks, EXLS. This is the daily chart. This is the weekly chart. It's how I always have it set up. And what you can see, if I go way down here, this is our entry point. We entered this stock right there. It was kind of perfect. And so then this line right there is where we hit a 20% profit. This doesn't mean anything. It's just for my eyes to see how well we're doing on this stock. So now I'm going to take you back over to the weekly side for a second and show you what I mean by this change. So based on the weekly chart, this is each line is 1 week. This is an area of support. You can see it's called the 1 week pivot point. So this is an area of support. So I put our max stop, I also call it a preferred stop, below that level. And if you take a look at the price, that stop is at $46.64. Okay. If you go over to the left side, our alert stop is at $50.20, so higher. And what happens is if price drops down and touches that, I will be alerted immediately when that happens. And the goal of this revised system is if it touches this, it doesn't sell us out, but it will alert me. And then I can have some time, I can look at all of the technicals and the fundamental analysis and the AI analysis and lots of other analysis that I do for you. And I can make a decision whether I actually want to sell it there or if I want to continue to give it a little bit more room, because this would be kind of the final stop. This is the live stop, we're out. I think what this is going to do, instead of just having one stop that is the same price, I like this system because it gives me some breathing room to make decisions, to do a great deal of analytics before the price hits what I would consider the absolute stop. And even the absolute stop, by the way, is well above our 20% profit. So I hope that makes sense. So all I've done is I've gone from using one stop to 2 different stops. One of them alerts me a little ahead of time. You can see how tight this stop is. This is really tight. This will give me some time to figure out what's happening, time meaning an hour or two, to figure out what's happening and to decide, do I want to put a live stop in and risk us being stopped out? Or are the technicals and the all the analytics saying, no, don't do that yet. Let's wait. But here, we're not going to wait forever. We still have a real stop in place. So I hope that helps. I hope that helps. I think it's going to definitely, I think it's going to be a terrific benefit. And every day, like always, when markets close, if prices go up, I'm adjusting stops. They're not just static. They move with the market. So I hope that helps as well. I had put a new stock in Group 1 accounts yesterday, TKO. I only put 2% of account value in, and I only did it in Group 1 because this was a new screen that I'm using based on AI, and I felt like it was a little higher risk, so I only did it in Group 1. And yesterday it was up, and then today, in a miserable day on the market, it was up another 3.2%. So this new system, one stock does not make a trend, but I sure do like the first stock I bought from this AI system that I have been taking a look at. So that's a story. A whole lot of red today. I'm kind of not surprised. Today was unemployment day where we got the unemployment numbers, and they were actually better than anticipated, which is inflationary. So it kind of spooked the market with inflation, and that happens. And then the next trading day, Monday, things work their way out, and we start to head back up. But today's number was combined with Trump making more tariff announcements, and tariffs are inflationary. Tariffs will raise your price. Some people like to argue about that. There is no argument about it. Tariffs raise prices, and it raises it on us, the consumers. So that is inflationary also. So it was kind of a double whammy. And that's why I believe the markets really had a problem today. So that's the story. If you have any questions about anything that I have covered, let me know. As always, just shoot me an email or hop on my website, and there is a button right here, schedule a video call with Bruce. Anytime, please use this anytime you want. And we'll talk about it. We'll talk about your account. We'll talk about if you're nervous. We'll talk about everything. But I'm doing a lot of work every day, all day, trying to reduce our exposure to the negative volatility. We like positive volatility. We don't like negative volatility. So if you have any questions, let me know. Other than that, it is Super Bowl weekend. Some people are getting tired of seeing the Chiefs. I'm not. I love watching a dynasty, and I love watching greatness, and that team is great. So I will be rooting for the Chiefs. Nothing against the Eagles. I love them too, but a three-peat of the Super Bowl has never happened, and I would love to witness that happening. So enjoy the game, no matter who you're rooting for. Enjoy yourselves, enjoy your weekend. I'll be back at this early Monday morning. If you need me, just shoot me an email or hop on my calendar. Talk to you soon. Bye-bye.